Hi. Do you have questions about where's this market headed? What about interest rates, financing, all of that? And maybe some questions on how do I buy a house? Well, I've got answers. Hi. My name is Milton, and today I'll be having a conversation with a good friend of mine, Kimber White of RE Financial Services. Kimber has been in the mortgage business for 33 years and going strong. He is the outgoing president of the National Mortgage Brokers Association, and he is the man with all the answers I trust. So in today's interview, you're going to have a lot of those questions answered, but we may run out of time. And if that happens, feel free to reach us and we'll get you the answers that you're looking for. Hi. Do you have questions on what's going to happen in 2022? Well, we've got some answers and we've got some predictions. Hi. My name is Milton, and I'm the broker of Franklin Realty Consultants and the team lead at Milton & Associates. This is my associate, Kimber White of RE Financial. Kimber, how long have you been in this business?
33 years.
And what do you do?
Mortgage broker.
Mortgage broker. So he's the money man, I'm the house man. So Kimber and I have been doing business for many, many years, more than we want to admit. We'll start aging ourselves. But we were all thrown for a whirlwind in 2022. We had lockdowns. I remember when we were selling one of my clients at multifamily in Little River, the appraiser goes to me, "This is the last appraisal. We're locking down. You just made the cut." And I said to myself, okay.
What are we going to do?
That was the first time anybody ever told me that. I'm like, that's an all new territory. We didn't know what to think, but I knew I wanted to close that deal. We needed to close that deal because it's not like we could have waited 6 months or a year to do that. We were able to close business. I still work throughout, right? Mask on, PPE. I've got pictures showing properties wearing booty covers and gloves and a mask and keeping 6 foot distance from clients, going outside in the sun, standing separate and negotiating. It's been, jumping through hoops.
Well, what we end up doing for that is we end up getting, if you remember, to do drive-bys. If you remember,
drive-by appraisal.
As I was president of the National Association at that time,
yeah.
And we fought and said, people can't get in,
right.
We got us labeled as an essential business,
yeah.
And what do? And we got Fannie and Freddie and FHA to accept drive-by appraisals, if you remember that.
Yeah. My husband was an essential worker working for a pharmaceutical company, and we couldn't have just anybody walking through the door risking his health because then he wouldn't be able to work. It's essential businesses. That was actually really, really good because that kept things rolling. Right? I think appraisals were maybe a little more conservative as well. People were scared, didn't know what to make of the market. And if you notice, I think properties sold for less. Rents were potentially not being collected. There was a moratorium on evictions. And so there was a lot of uncertainty in the market, and I think it was priced into that. But today,
it's going crazy.
It is roaring.
And it's not going to slow down.
I know part of it is pent-up demand because it's like a year that people didn't know what to do, didn't know if they were going to keep their job. Maybe they wanted to move. Or a lot of people realizing this house is too damn small.
There was a lot of that. A lot of houses too small. They wanted to move. They didn't like it. They lived in it for a year. They realized there was a lot of things wrong. They want to move up. They want to move forward. They're ready to go. And
people needed a home office.
Well, the big also that we're getting, and that is something people need to understand, we are not going to have a slowdown in Florida because people are moving to Florida. Florida is one of the few states, and I think it triggered people to say, we didn't have a lockdown, we didn't have the craziness that a lot of other states had. And so a lot of people are now moving here. They're moving here for retirement, for tax purposes.
Yeah.
Florida is known to go up and to be moving up. And
I think Florida and South Florida in general, because I'm a little partial, has always been a place where people wanted to come and wanted to live. I think the biggest issue in the past was, I won't be able to keep my salary. I won't be able to find a job in the industry or at the pay level that a lot of people were used to. And that was the biggest issue because I had a lot of clients and friends who wanted to move to Florida. And they would move here for about 6 months until they ran out of money, and then they had to go with the tail between their legs back home. But now, COVID kind of revolutionized everything. People can work from home or at least have that option. It's even caused a lot of people to up and quit their job and change their lifestyle and move to where they want to live. And I always said that South Florida is paradise. It's a beautiful day every day. Don't believe the hype about hurricanes. It's not that bad. We get to cook out for a week, get to meet your neighbors. But now People can live here. They can work from home. Why would they want to be cooped up in a 400 square foot studio in like Manhattan, let's say, paying $5,000 a month? Where here, that'll get you a 3-bedroom, 2-bath house with a pool.
And it does. And what ends up happening is that remote working, and as we all know, it's been extended indefinitely. We've also found
a lot of companies are going permanent.
A lot of corporate America has said, we're downsized. They downsized during the pandemic. They're not going to ramp up. They realize that they're just as effective, just as efficient working.
Yeah.
So people are moving wherever they want to move. And lenders have noticed that. So lenders are opening up. So, an employment letter saying that they can work, they can do what they want to is much better. People also really moving here that there's no income tax.
Right.
So that
Huge.
saves them for income tax.
It's a 10% raise. When people from New York, for example, move to Florida, they get a 10% raise. I've had friends who came here on a temporary trial basis, and they rented themselves a 2-bedroom condo, high-rise, for $3,500 a month. And he literally said to me, I live here for free because of the savings.
Yep. Yeah, I just had a client, real quick on that moving here from California. Unfortunately, her retirement account is in California. We know that on pulling out of your retirement account, she uses about 15% federal tax to bring into it. But because she's in California, it is a 22.5% tax in the state of California on top of it. If she was in Florida, it wasn't there. That's the one she was saying that she's moving here. I've got New York clients moving here using their pensions. And they're getting taxed. You get taxed on your pensions and everything up there in the state of a tune about 9 or 10%. You don't get that here. So people are saying, hey, on my pensions, say $6,000 a month, that's $600. That goes toward a mortgage payment. That's where I'm living for free.
That's about $100,000 in a mortgage.
Yep.
Right? We don't have these things now. We don't have these things yet. That might change. But for now, the floodgates are open. And I've had more clients from out of town, domestic buyers, than I can count. Like in the past, and we'll get back to this, when I first got into the business nearly 20 years ago, the majority of my clients were first-time home buyers. And then that changed over time, maybe because I changed moving within the industry, but then the majority of my clients were then foreign nationals buying second homes here. And then the dollar got really strong. And they changed the tax laws on how you could bring money in. And then our buyers were domestic buyers, New Yorkers here and there, a couple of snowbirds. But now we've got everybody. And the international market is coming back to South Florida at be damned whatever the dollar is. I think if you think lockdown was bad in your city, try a different country, And so they want to be here as often as they can. And so I'm selling properties to people from Europe, South America, Canada, and vast majority domestic American residents from large cities moving to Miami, which is considered a small city, but I think we punch above our weight. Let's talk about the changing market today. I think interest rates were down and then they were up. Where do you see these rates going?
The interest rates are going to go up.
Have to.
They have to go up. Remember, when interest rates are low, it is a sign of an unhealthy economy.
Right.
That's what people have to understand. In layman's terms, when you see low interest rates, your economy is not doing well. They're trying to put money into the economy.
Like France has negative
interest rates. So now we had low interest rates. Interest rates have went from a historic low, and I've been in this business 33 years, and I'll say historic low of 2.5 on a 30-year fix, to today's average of about 3%. That is still historically low.
Super.
The average interest rate, if you look over the past 10 years, is about 5%. What is the difference when you buy a house? Well, you've got more buying power now. So even though your prices are going up, you still have more buying power. But I will say you're looking at your mortgage.
Buying power as in your dollar goes further, right?
Yes.
So, like, for example, $350,000 at a 3% interest rate, you're saying maybe about $1,200 a month. But if that interest rate goes to like a 4.5%, now it's like $1,600.
Correct. It goes to about $1,600.
Same price and more expensive.
And then again, you have the ability to qualify. Maybe you don't qualify for that house. Right. So you're not going to be able to qualify because of your income for more house.
Right.
So right now you are able to qualify for more home and be able to use a lower interest rate.
Right.
And I think we're going to probably stabilize around 3.5%, we would say, for the next spring. But I would say within the next year, you're going to be back to 4%.
Back to 4%, which is still good. My first interest rate in 2005 was like a 6.75. One of those stated, no doc, what's your name, here's money.
First mortgage I ever did was 17.5%. The first mortgage that I wrote was 17.5%.
80s. After the savings and loan crisis.
Yes.
that.
17.5%.
Yeah, and people are still buying houses.
They're still buying houses.
Because people still have to live somewhere.
And he had to put 20% down.
So in any other country, interest rates are that high, and nobody has a 30-year mortgage. Most South Americans I know, they get like a 20% interest rate, but they pay that house off in 5 years because it's that expensive. They want to be able to kind of live their life.
In Canada, you have to reaffirm your mortgage every 5 years.
Oh, I did not know that.
It is a long term, but your mortgage has to be reaffirmed.
So you have to requalify?
Basically, if it's been good, it's reaffirmed, but it reaffirms. It is not just guaranteed for 30 years. It's reaffirmed.
But if you pay on time, all the time, they still need to reaffirm you?
Yes.
Wow. That's
your mortgage is still reaffirmed.
You know, because like if you had a W-2 job, but then you opened your own business, you don't necessarily qualify for the mortgage you already have because you're claiming losses, because for the first 5 years of a new business, you're reinvesting a lot of that money.
It's a different world.
Yeah, it's a different world. Okay. And so you think interest rates are going to level off at around 4.5%?
Yeah, I think
these are guesstimates.
I don't have a crystal ball, but if I'm looking at where we've went in the past 120 days from a 2.5% to a 3% to, if you went anywhere else today, I mean, you're probably going to be at 3, and actually I know I've talked to my clients 3.25 to 3.375, and we're at where I'm lending at 3% today.
3%.
And I think that's a big difference too. Is people want to know, well, why is some rate over here? Why is some rate over here? Be careful when you're looking at your interest rates when you're going out to buy. You want to buy. You need to make sure that you're looking at what you're having. Most people right now are in the high 3s. There's a lot of people in the high 3s.
Well, interest rates are going to vary depending upon the property type as well. Because I have clients who are like, oh, but my approval letter said it was going to be at 3%, but now I'm at 3.6% or something. And I'm like, well, they qualified you for a single-family home, but you were in a condo. And a condo is
or multifamily.
Or multifamily, right. So they're going to treat those different things, those different type of properties differently. You know, exactly. I belong to a couple of different Facebook groups for first-time home buyers. I try to give as much advice as possible. And the one of the questions that I receive all the time is, I make $70,000 a year, I have a car payment and a little bit of credit card debt, and I can't qualify. And I always ask them, well, what's your car payment? You know? What's your car payment? Is it a lease? Is it a purchase? Also, how long have you been out of school? Right. Because there's a lot of loans that require you to have 2 years.
Well, if you're not self-employed, or if you're not 1099, which means you're paying taxes yourself, your employer's not taking it out for you, or if you're a commissioned job, then yes, you would need a minimum of a 12-month history or a 2-year history. If you're a brand new person starting out on your own, and you have your first job, we can do the loan under the guidelines. If you have a W-2, which means people take your employer takes your taxes
you pay most of the taxes.
You pay most of your taxes, you pay them. Then at that point, we'll need your transcripts and one paycheck.
That's regular conventional loan?
And FHA and VA.
Well, FHA, I always knew that you could literally be a day away, like you graduated on a Wednesday, you buy a house on a Thursday, as long as you have a job lined up. Right? But conventional, you can do that with conventional?
Yes, now you can do that.
Okay, so I didn't know you could do that with conventional.
Do that with conventional.
And it's a specific type of degrees or?
Any degree. As long as you've shown that you were in college for that 2-year history.
What if I'm in a nursing program?
That's fine. 2 years.
2 years.
2 years.
But, okay, so what if I'm in a nursing program? On Wednesday, I graduate. On Thursday, I want to buy a house. What mortgage would I be able to qualify for if I have a job lined up? And it's a nursing program.
You would need the employment letter, and you would have to be verified that you're on your first day. You would have to verify you started your job.
Yeah, and they're going to call. They're going to check.
Call that
DOE.
Milton started his job today.
So, Kimber, I oftentimes get new clients calling me, whether they came in through some type of lead generation that I have, or they were referred to me. But the first initial consult with them, they want to look at that house. They want to see that house. They want to go out. They want to look at properties. They've been looking at properties for 6 months online. They know more than me. They are sure, and they want to get out there. And I ask them, do you need a mortgage to make a purchase? And they go, well, yeah. We have to worry. We got good credit. We got great income. No problem. Don't worry about it. I go, well, first things first. You need to speak to a banker. I don't want them to run my credit. I don't want them to run my credits. You need to know what you can buy. I need to know what I need to look for. And so, what do you tell them? How do you get them over the hump when they're like, I don't want you to run my credit?
To get over the hump, number one, I'll say in today's market, the supply and demand, the supply is low, the demand is high, and no agent is going to even show the house,
no good agent.
or a good agent, or even entertain an offer unless they've had their credit and their income and their assets checked. So, number one, the falsity of, pull my credit, it's going to hurt my credit. It pulls 3 points. Pulls your credit 3 points.
It's not like shopping for a car.
It's not shopping for a car where they shotgun you, send you to the other limit. It's about 3 points. And you also can go to other mortgage professionals and let them run your credit, and that counts as one pull within a 90-day period.
So if you have 5 bankers pull your credit within 90 days, it counts for one pull.
Yes. Unlike cars, where you're
every time you go to a different dealer,
credit card. That is revolving debt, unsecured debt.
The way I explain it to people is, if it is a debt that you're taking upon immediately, it's going to affect your credit much stronger than if it's you're shopping for a mortgage, because you might not end up buying a house, right? But if you're at a dealership, you're driving out with a car. If you apply for a credit card, it's coming in the mail.
Yeah.
That's a different kind of pull. That's a different kind of debt. But yeah, I think it's really important. People got to know you have to get qualified. What I say to people is, I'm going to go to war for you to get a home. But if you don't give me any artillery, you don't give me any weapons to go out there and fight, we're not going to get a house. And as a listing agent, when I receive an offer, if it doesn't have an approval letter, and today, when you've got 13, 15, 20 different offers on a property, I want more than an approval letter. I want to know proof of funds for your down payment. And it's very intrusive. You know, a lot of people don't like it. Well, that mortgage qualifying process, it felt so intrusive. Do you need somebody's money to buy a house? Because if you do, they got questions.
Very true. And taking another step further on the questions is that then you've got your credit pulled, but do you know that they're really qualified? And does the listing agent you're trying to get the house for know you're qualified? Your credit isn't all that just qualifies. It is your income. Your income, your debt that you have.
It's how you make that income.
It's how you make that income.
Right.
It's if you're W-2, if you're 1099, if you're self-employed. All those factor in and have different rules that apply. And this is why it's important to get yourself truly pre-qualified.
And I would say, make sure your banker has seen your tax return. It's the most important part. The credit, yes, you have to be at a certain level in order to qualify. But your tax returns is what you have told the government that you make. And that is what the loan will be based on. And so I have a lot of people who are like, no, I make $300,000. Like, your tax return says you make $60,000. Sorry to burst your bubble. I know write-offs are good, but when you're looking for a loan, don't write off.
Right.
Because you need to justify that income. So if somebody had an attorney, they went to some fly-by-night tax preparer company, and they decided, well, I'm going to do these guys a good deed, and I'm going to write off as much as I can. I'm going to take as much deductions as I can and try to zero their income or limit their tax liability. And they thought they had a good job done for them, but now they're going to get qualified, and they've got no really income that they can use. How can you fix that? Can you fix that? We have to wait a year?
You need to wait to fix that.
Can you amend it?
You can amend your tax returns and report income. I would tell people you need to be careful when you're amending your tax return. If you're amending your tax return to buy a house, be careful with that.
You might get audited.
You might get audited. You cannot amend your tax return once you go under contract and the loan is submitted. That is definitely, you're now amending to make your house.
That could be mortgage fraud, right?
Yeah, it could be mortgage fraud. Yeah, absolutely.
There are many ways of mortgage fraud. What to avoid?
So you can't do that. But if you're like, I made a mistake and I need to fix my tax return and pay my taxes, then that's fine. You haven't gone into house.
Is it going to go into manual underwriting at that point?
No, it will not.
Okay.
We'll just have to have the amended tax return, and we'll have to have something proven from a stamp at the IRS. So this is not your tax return. Milton did this. You have to go to the IRS, get stamped that you amended your tax return, and then if there's a tax owed, you have to pay those taxes.
Here's the tip. If you've had identity theft before and the IRS sends you a PIN to file your taxes, don't lose that PIN. Because then you got to go to the IRS office the day before Thanksgiving to try to get them to stamp you. Now, downtown didn't have a line, luckily. I had a question come in. What is the difference between a mortgage banker and a mortgage broker, or a mortgage broker business, or are there many other versions of being a banker?
A mortgage banker is someone who actually works for a bank or a retail institution, and they have one lender who has the products. That means whatever that box that lender puts you in, whatever overlay, what an overlay is, means there's something on your loan that they may say, well, the guideline, which is what's Fannie and Freddie, that is who sells the loan for everyone that knows. That's who buys, who you sell them to. They may not have this overlay. Well, an overlay is basically what they want to insure the loan.
So like FHA loans, for example, you qualify with a 580, but not really.
No, you qualify with the 580, but a bank is probably going to tell you it's 620. FHA goes up to a 55% debt ratio.
So those are the overlays.
Those are overlays. Bank may say 45. Conventional loans go up to 50% debt ratio. Most banks do 38 over 43. So those are the type things. But the difference between them is that the rate is locked in with one person, where you go, what you do, how you do it. A mortgage broker, we are actually like a wholesaler. And we now are able to shop different lenders. Like with us, I literally have a portfolio of about 20 lenders that I can shop. And I will shop you for the best rate. We also don't have the overhead that a retail shop has as a broker. They're also small. Most mortgage brokers are small, independent, local businesses who knows the area, knows you, and has also as a one-on-one relationship. Yeah. Unlike going to a big bank. I hear when you go, I'm going to my bank because I have a relationship at my
bank. Unless you're private banking, you don't have a relationship. Not the one you thought you did.
I have people that have $1 million in their bank, and it's a big bank. They still qualify the same way. They may have got a little bit difference in the rate, an 8, and my rate would say better still. But you don't have that relationship unless it is a private bank. So you're better off to go to your broker, go find an independent mortgage broker business, because they're going to work with you. They're going to shop. They're going to make the deal work. They're also doing one-to-one. They also know everything that's in-house. But they also know that they have a program that's going to work for you, that you're not fitting in a box like you are with a bank or bank.
What I tell people is that when you're going to a large institutional lender, they've got like 3 boxes they can fit you in. And if you're not exactly a perfect fit for that box, they do not have a loan program for you. You know, one, for example, condos are treated like the redheaded stepchild, and in Miami, even worse. South Florida in general, they look at us like there's something wrong with us. I think they're just jealous. Condos have to have a 10% reserve, no litigation, no this, no that, the other. They're going to run through a condo questionnaire in order to qualify for regular conventional financing. Right. But most of the condominiums don't have a full 10% reserve or something. There's something wrong with it. And so, but if I only have 10% to purchase and you know, I can't even mention institutional lender. And institutional lender B and C say, we can do it, but you got to fill the condo questionnaire. And then once they see on that condo questionnaire, it doesn't have 10%, maybe it has 9.8%. Right. They are not going to be able to do that loan. And then you think, I can't buy this condo. But if you went to a broker, they could try to put you in that box, but then they've got a whole room full of boxes to try to fund the loan. And you can do like a piggyback loan, right?
A piggyback loan. You know, you can do a first, second to get to the 90%, so you don't have the condo questionnaire.
And you don't have PMI.
You don't have PMI on it either. That is your differences. So there's always a way, and I think that's one thing a broker does. A broker tries to find a way to make the deal work. You have to understand, if you go to a bank or most big lenders, it's the same. It's a rubber box. Do you fit in the box? Do you make it work? Right. Okay, goodbye, next.
What drives me crazy about those institutional lenders is that the person taking the application doesn't know really anything about mortgages, mostly. Oh. And so they're going to get you to fill that application out. You may even have to pay a processing fee or application fee, etc. They're going to run your credit, and then you find out 2 weeks into the transaction that it's not a perfect fit.
Right.
The emotional roller coaster that a lot of buyers are going to get into, and then they're going to get disheartened and not even want to buy potentially, it's huge. It's not fair.
Well, the other thing, and not you're telling the difference, the other thing with big banks is they are not in, you're in maybe 3 weeks in before you're underwriting. So you're into your appraisal, your inspections, everything, for them to tell you there's an issue they can't have it done. And then you have a closing.
$1,000 and you get nothing.
Or this day and time, you have a contract that is due to close on such and such a date, and it's all here. They're within 30 days. Most people want to close 3 weeks to 30 days.
And in a seller's market, try asking for an extension.
Well, we'll take an extension, but we want your deposit.
I've had one situation where they had a cash backup offer. So they didn't have to give us an extension. If we didn't get everything right from the start, they were looking for a reason to kick us out of contract.
Yeah.
And they didn't want the money. They just wanted you out of contract.
Right.
Because they had a higher offer.
Exactly.
You know, potentially.
And that's why you need to make sure you're qualified. And it goes back to where we said about qualifying. Make sure that you're fully qualified. When you go to a broker, you're going to sit down with them. Because I don't think people understand this, that most of the people can literally have come off the teller line, got their NMLS license, and taken order.
They're selling shoes the day before, they're doing loans the day after.
They don't make any ability or make any decisions. There's no decisions made with them. It's a plug into the computer. Do you work in the computer?
Well, also, they are bonus based on how many applications they took. It's not even in their best interest to know whether or not you qualify. They just want you to get that application done.
Right.
And I think my job as a realtor is to make sure that I get you a home, right? That I get you over that finish line. And so you need to have the right team of people that are going to be able to do that for you. And the realtor is one, okay? Or the listing agent and the selling agent. But the banker is integral to getting financing for the home.
And banks are not required to have their loan officer's license.
Oh, really?
No.
So brokers are.
Yes, we're required to have.
Every broker's got to have a license.
We did.
But not a banker?
No. They're not required to be licensed.
I wonder who makes the rules.
Well, we don't require licensing. They don't require to have any licensing through NMLS, anything like that.
Because for realtors, you can't even open a door if you don't have a license.
We're required to be licensed, take our 8 hours of continuing education. We are on what they call an NMLS, which is a national registry. So if something goes wrong,
they even check your credit.
They check our credit. They check
your background check, everything.
They think everything. So that's not required. So that is with us. And we really are professionals. And I'm not knocking a big institution, but we're professionals. I call us mortgage consultants. There's a big difference in, hi, plug a number, get your credit. I'm going to sit there and go, what the best loan that fits you. Right. I'm also going to sit there and advise you of what you feel that you need and listen to you so you understand what you're getting into. You understand what you need. So you can make sure that when your realtor's there, you're also making sure, especially with listing agents, I'm going to do this right now. We've got a lot of deals because of this. You need to make sure you got a mortgage broker, and I'm going to use the word broker, that's actually going to pick up the phone and talk to a listing agent.
Oh, my goodness. In a market like we have today, where there's so many offers that are being bombarded on the limited inventory that we have, if you do not have a partner with your banker, your broker, that is going to go to bat for you, not only for me as the agent, but for the buyer. Like, he's going to go to bat for you. He's going to call that listing agent to try to sell your case on how qualified you are. That's the relationship that you need. And right now, where everybody's gunning for my job as a realtor, everybody wants to get into the real estate business. Amazon wants to get into the real estate business. I don't know if they're going to be all that successful because it's very dependent upon relationships and knowing the neighborhood and knowing people. And I think it's the same thing in banking. You have all these different websites that want to start doing loans. And hey, there may be some people that will have a good experience with them, but I, in 20 years, have not had one good experience with any of those online lenders and most of the institutional lenders. And it's because once that application leaves one department, we have no idea where the other department is. They're on different time zones. You know, I had one time that I did with one of the big banks. My client did the application. Underwriting was in like Portland. You know, processing was in Philadelphia. You know, we were in different time zones. And nobody knew who to talk to who. And when we tried to talk to the person that took the application, they had no answers for us because they don't even know how to contact the person over here and the person over there. And so my personal preference when I'm working with a broker is I have the number to the broker and the processor. And the banker can get in touch with the underwriter, with the loan rep, the wholesaler and whatnot. Like, we know where the chain goes, where it begins and where it ends. Right? It's almost like a closed loop. And that's, I think, so important, is being able to get that personal connection. So let's say you sold your home and you're buying a new one. Your stuff is in storage in a truck. Because here in Florida, it's a wild, wild west. You're closing and buying the same day. But if you've got to wait a week and you're in limbo where you're technically homeless and then something happens with your mortgage and you can't get anybody on the phone, that's the absolute worst. I have to take my hat off to you. You pick up the phone. You also call me at 10 p.m. But,
I do.
Yeah. But it picks up the phone, even on a weekend. That's so important, you know, because I can't leave my clients hanging. Right. You got to set expectations properly, but people also want to feel like they're being cared for. You know, buying a house, selling a house, it's typically the largest investment most people will make in their lives. I can't take it lightly. Neither should your banker. Nobody should. This is a very, very good or traumatic experience.
In the buying process today, because of all the regulations, because of the meltdown that we've had over the past few years, and even now more since COVID, because of so many people that got behind on mortgage payment, the regulations and the items and the things that you need, you need someone there that's going to walk you through it, understanding. You don't need a computer that's going to just spit it out and say, this is what you need. And you also need someone there that's there after 5 p.m. and weekends for you, because that is very important. And to answer your questions,
oftentimes the buyers are working between 9 to 5. They only have time to call you after working hours.
And it's important to have that relationship and to trust those people. And it's also to make sure that when you're going through that process, you interview the person, and you should trust your realtor, but you should also ask, like Milton, him and us had a relationship for years, and we both know what we're doing. You should know how we've been working with that mortgage professional. What is their knowledge? What do they do? And it's your job. It's not your realtor's job to be doing your mortgage. And if your realtor is doing your mortgage, then you might want to look around and say, what's going on with my mortgage professional? Because I don't do real estate. Milton doesn't do mortgages. No. We will talk to each other.
I know about it, but I don't do
real estate. I don't do it.
I don't do it. I don't want it to ever be like a conflict of interest. I always found that, if you're making your entire month on one person, you're not really looking out for that person. You need that deal, right? And so I always say pigs eat well, hogs are slaughtered.
True.
So you can't be too greedy. It ultimately has to be about the service. It has to be about the person.
And one of the things for first-time buyers, I'm hearing this a lot lately, especially with these online lenders, and I think I call it buyer beware. If it sounds too good to be true, it probably is.
Right.
And what's happening lately, a lot of the lenders, because the rates have gone up, will come along to you and you'll go online and you'll say, I talked to you today about a rate of being at 3%. But all of a sudden you'll go online and you're going to say to me, hi, but Kimber, I saw your interest rate at an interest rate online at 2.375 or 2.5.
Paying 4 points.
You're paying 4 points. Yeah. And
what's the point?
If we're educated.
People want to know what's the point.
What's a point?
Yeah.
A point, let's use this for an example. You're getting a house for $400,000. You're putting 20% down. So now you have a $320,000 loan. A point equals 1% of that loan.
$3,200.
$3,200. So I just saw yesterday that it was a 2.5 points. So if that loan, it was a 2.625 rate, 2.5 points, which means to buy that rate down to 2.625.
It's almost $8,000.
It was almost $8,000. Now, what is the difference in the mortgage payment in 0.37? It's $100 a month.
So you need to be in that house for 10 years.
10 years.
Yeah.
And that's your difference. You need to be in the house for 10 years. Be careful when someone says they're giving me 2.625 or be careful with your rates. Be careful with things like that, because that is huge lately.
Yeah, interest rates are important, but also how long are you going to be in that home? Like, buying down that rate doesn't make sense if you're going to be in that home for less than 5 years, right? And you don't necessarily predict the future. I always say that try to keep the money in your pocket, because you're going to need to, retile and paint and, the stuff like that, as opposed to, buying down the rate.
Right.
Unless if you have to buy down the rate to get to that affordable payment, that's one thing.
But there's other ways with your affordable payment, and you brought that in. That's a good one. So now you have $8,000 or $9,000, and you need that $100 to do affordable payment. Well, that's why you go to a mortgage broker. Now we're going to look at your credit report, and we're going to look what's on there and say, you know what, Milton? You've got a $100 a month payment on this credit card for $4,000.
But I remember I had to pay off my computer.
Doesn't it make better sense to pay off a debt
the computer
than to buy down to get the $100 a month for you to qualify?
Much more sense.
It makes much sense to put the money and invest it in yourself. And that is the reason that the difference between a mortgage broker and a banker is that we look at what's best for the individual. And we look at how do we make sure that what you're doing is doing in your best interest and still get you in a home.
Let's make some predictions. I personally think, because I am in this business, living and breathing it every day, and I have some clients come up to me and they saw some dude on YouTube who just started, and he's got a new website, he just got to join his mailing list, and he's telling me all of this is a fraud. There aren't that many people moving to Miami, and the market is going to crash. I have one thing to say to said gentleman. Stop lying to people.
Right.
I'm in this business. I live and breathe it every day. My phone rings with new people moving here. I see rental communities being leased up before they're even done with construction. You're lying. Stop lying to people. Or if he does even have, like, let's just say a sliver of truth that maybe the net number of people in Miami remains the same. It's been people with lower incomes who can't afford to stay here have had to move out. And then people with six-figure incomes are moving in. And that's why rents are going up. And it's supply and demand. I don't think we built enough over the past couple of years. First off, Miami doesn't even have that much land. People think it does. We don't have that much land to build, or buildable land. We're basically, we're a beautiful paradise on the beach, or a swamp, really. We're mostly a swamp.
One of the two.
You know?
Talking about that, I hear that too. It's going to crash. We're going to have a crash. We're going to have a market crash. Let me give some backstops on the financial side. We all did have the horrible crash in it. Number one, people didn't have value on their properties. They had stripped every dime out of their properties. That was number one. Number two, there was no backstop, no regulation in the mortgage industry or the housing industry.
Negative amortization loans, pick-up payment loans.
Pick-a-pays.
Yeah.
So we were setting ourselves up. Dodd-Frank came in, which is a regulatory agency, in 2011. All of those put backstops in. They put protection in. The difference, and I hear people, well, you see this, and there's more people behind on mortgages than there were before. Yes, but those people have equities. The federal government, the CFPB, other agencies, which is your Consumer Protection Agency, what you want to know what the CFPB is, they have put things in place to protect these people, keep them in their homes, to get them out. Right. The rents are going astronomically high all over the United States, but especially in Florida and the South Florida. When I look, even the price of homes today, when I look at a first-time home buyer who is looking to buy a home today, it is cheaper for him to still buy a home
if you can come up with a down payment.
Come up with a down payment of 3%
is the catch.
But again, this administration that's in right now has already got in, which we think is going to pass. There's going to be home buyer assistance. There's home buyer assistance programs. There's going to be first-time home buyer programs. So that's there. But there are also so many people with equity in their homes when they're selling.
A lot of it
coming in.
Let me interrupt. Even with the new construction, back in the day during the boom in 2005, 2006, you could put $1,500 down and get a house. You didn't have to put a larger down payment or you get 107% financing. Every new construction since, let's say 2015 was 50% down payment, 30% down payment. And then you compound that with appreciation. Most people are sitting on a ton of equity. Even the people that aren't sitting on a ton of equity, let's just say they just purchased and they purchased with a low down payment. The affordability, because the interest rate is lower, is better today than it was 10 years ago.
And people talk about inflation, but there's still, every economist, we just came back from a base, there's more disposable income among the Americans today than there was back then.
Yeah.
And there's an ability. And you've got,
well, the credit markets are flawed.
Well, you've got to live somewhere. And that's what I tell people. You have to live somewhere unless you don't live under the bridge in a box. You've got to live somewhere. And when you look at coming up with your down payment, which can be as low as 3%, and actually this program's coming out now with 100% in FHA.
They price that into the rate.
It's just priced into the rate.
Yeah.
So for someone to say the market is going to crash, will it slow? Maybe. But economists that we just listened to, and these are some of the most world-renowned economists here I listen to, Florida is one of the hottest markets, and they do not expect it to slow down for the next literally 18 months.
Right.
Minimum.
Yeah. The minimum 18 months could be 3 years. Yeah. What I've told people is that Miami is becoming LA. Everything is going to be $500,000. Well, ladies and gentlemen, Kimber and I could go on forever, but we ran out of time. So, if there are any questions that we did not get to, please reach us direct. My name is Milton Andrade. You can reach me on my personal cell at 954-629-9952. And Kimber, who is one of the only mortgage brokers I know that picks up the phone all the time, is 954-696-1435. If you like this content, like and subscribe below. I'll have all of our contact information there so you can reach us directly or send us a text or an email with whatever questions you might have. There are a lot of new loan programs that will be coming out soon, and we'll make sure to inform you of all of them. All right? It's a pleasure, and I hope to see you guys again.